What do you find more surprising? Is it the move in euro, which is also because, of course, what happened with dollar with that jobs report last week? Or is it, that the market is actually reacting to some kind of political news, which we haven't seen for the last 2 years?
Yeah, it's kind of funny because I guess we saw that with emerging markets, but sort of like coming to developed countries as well. And I think this euro move is kind of interesting because, like you said, on one hand, it is a reaction as well to people kind of pushing back further the prospect of a rate cut in the U.S. while we've already got this kind of opening cut in Europe. And I think kind of these election results and the weaker euro really puts the ECB in a bind because the currency weakness will have an effect on inflation. And so that will have implications for what they can do further down the line, especially with kind of actually some data showing that inflation might not be as weak as we expected in Europe as well.
And Katharine, does it impact actually what the central bank does? The ECB kind of, they were the first ones to cut, certainly amongst the Bank of England and the Fed. It happened without a big hitch. Does it put the next ones in play?
My sense from the tone that we got from the press conference is that they are very keen to at least give themselves the optionality of delaying any further cuts by a bit more than perhaps what they had been sort of signaling and signposting, not that long ago. I think Justina is very right in saying that, at the margin, of course, a weaker euro is going to be more inflationary. That said, the euro area is a very large economic region. It will help on the competitiveness front where we've seen manufacturing is really struggling. And so, whether this is enough to turn the needle, I think remains an open question. But the prospects for sort of supply side reforms, I think, has much more of a question mark on the back of these election results.
And what does it mean for your appetite for some of the, the German bunds? We were looking there at French bunds or even Italian BTPs.
The remarkable thing is coming out of the pandemic, Europe has, big picture, had pretty much of a smooth ride when it comes to monetary policy setting. We've seen peripheral spreads narrowing. There's been a bit of a feel-good factor. And my sense is that it's going to be a bit more of a bumpy ride, not just for core countries like France, but even for Italy. They've got a tough budget coming up this fall. And so it's going to be harder for markets to digest some of this, I suspect.